Welcome to CEO Insights. I'm Marilyn de Guzman with investingnews.com. Boss Energy is ramping up development work for the planned restart of the Honeymoon uranium project in South Australia. For the latest on this and other updates from the company, I'm speaking with Duncan Craib, Managing Director and CEO of Boss Energy. Welcome, Duncan.
Thank you. Thanks very much, Marilyn, for having us on the show.
Yeah, so let's start our conversation with just providing us an update on the company and more specifically, are you achieving your strategic objectives and what can investors expect in terms of future growth?
Sure. So, Boss Energy is the 100% owner of the Honeymoon uranium project in South Australia. And for those who don't know, South Australia is one of 7 states in Australia, but it is the premier state for uranium mining. The only 3 operating uranium mines in Australia are located in that state. So, yeah, Boss Energy's Honeymoon mine became Australia's 3rd operating mine in April of this year. And that's the first uranium mine to come into production in the past decade in Australia. So it's a big achievement. And with that, we've got sort of first mover advantage into the new market. Furthermore, in June of this year, in January of this year, we acquired 30% of the Alta Mesa mine, which is owned predominantly by Encore Energy, which is located in South Texas. So that particular mine came into production in June of this year. And now what we've got is Boss Energy owning 2 producing mines, both actually shipping uranium and earning sales revenue. So with that, Boss Energy has become the first multi-uranium mine producer on the Australian Stock Exchange. So it's been, in terms of strategic objectives, absolutely, we're meeting them. Just to commence production at those 2 mine sites, now we're ramping up to our nameplate capacity, earning sales revenue, and it's a terrific time to be in the cycle. And the whole point being that it's a restart project. We've got first mover advantage, and we're now looking to capitalise on what we believe is the start of a new uranium bull cycle.
Hmm. So maybe talking about a little bit more about the honeymoon project specifically for you know with the performance to date of the well fields and the newly implemented ion exchange columns. Could you give us an update on that and how that is progressing?
Yeah, thank you, because they were the 2 key technical challenges that we had. How do we improve leaching the correct tenors from the well fields such that we can run an efficient plant? And the second was implementing ion exchange. So in terms of well fields, we did a lot of feasibility studies and field leach trials going all the way back to 2016, 2017. We looked at the lixiviant makeup, basically the solution that we put through the ore body to leach the uranium. And we use a combination of water, we use it with acid, sulfuric acid, and also ferric as an ion oxidant to leach that uranium. So after a lot of trial and error and testing, we found a solution that works incredibly well for Honeymoon. So the grades that we're actually getting right now are between 70 to 80 milligram per litre. If you compare that to the previous operators, they're averaging around 50 milligram per litre. So we're doing really well with that tenor of uranium being leached. In terms of the processing plant, we did away with solvent extraction. We went for a more efficient method of production for our particular geological footprint, which is called ion exchange. And ion exchange is dependent on having resin beads that can actually cope with the solution, pregnant leach solution coming from the well field. So that's proved to be far more efficient. It's increasing our production throughput, and it's a lower operating cost as well through the processing plant. So, yeah, in terms of technical success, the mine's really showing its capabilities now. We're getting high grade tenor from well fields, and the processing plant's regularly producing our final product, U3O8, such that we believe we will, very confident actually, hit our initial guidance of 850,000 pounds produced by June of 2025, and then the following year 1.6 million, up to the 3rd year of nameplate capacity at 2.45 million pounds. So it's a gradual ramp up, but yeah, we're kicking all the goals, which is terrific.
Yeah. You have an export license of 3.3 million pounds. Are you able to talk about sort of expansion plans for the honeymoon and in terms of lifting your annual production and, maybe even extending the
Sure.
life of mine?
Sure. So really, that nameplate production that we've designed the plant is for 2.45 million pounds. However, we have done engineering work to say instead of just 6 ion exchange columns, we could add another 2 columns, for example. We could increase put another calciner in the drying and packing room. We could expand the sort of precipitation circuit. So we've got plans in place to take our production throughput up to 3.3 million pounds. And that's the plan. But to do so, we need additional resource. So right now, the global resource footprint on our tenements is 72 million pounds. Half of those, 36 million pounds, reside on the mining license itself. The other 36 million pounds sits on 2 satellite deposits. So what we're doing now is taking all the steps to infill drill, do the geological modelling of those satellite deposits, and then apply for mining licenses. Once granted, those mining licenses will enable the company to then mine from those satellite deposits. And then it's a question whether you increase your production throughput, which is my preference, or it may even extend the life of mine of Honeymoon. So yeah, it's really finding that additional resource to allow you to produce up to that 3.3 million pound threshold.
Mm. What about offtake? What's the strategy for sort of the recipient or the end user for your uranium?
Sure. So it's an interesting market. We believe we are at the beginning stages of a new bull market. For the last 23 months, there's just been an incremental growth in long-term pricing. So in terms of term contracts, we're seeing around 83 US per pound. So with that in mind, what we are looking to do is really enter into more market-related contracts. So those contracts with a floor and a ceiling. It's a floor to protect you from the downside. The ceiling is insisted then upon by the utility to cap the upside. So essentially now you're looking at, say, floors of around 75 US per pound, ceilings up to 115, 120 US per pound. So the contracting strategy really is to enter into these contracts in a layered approach. So we may enter into one this month, another one in 3 or 4 months' time, all the while growing with the market, walking alongside the incremental growth in the commodity price. So that's our preference. At some stage, we believe the price will overshoot. We think that will happen in the next few years. And the reason being is that a lot of development projects that say they can come on, I think may struggle. And if that is the case, what the market's anticipating, all this fresh supply, and that doesn't happen, well, demand's there and demand's increasing, that structural deficit continues to widen. So that's where we believe this price overshoot will come. It's incredibly difficult to pick the top of a commodity price, but by layering in contracts, we'll be walking alongside. When that price does overshoot, we may switch our strategy to then fix pricing such that you then maintain a higher level, stable level for the life of mine. So, yeah, it's a very strategic part of the business, our sales strategy. But so far, we've signed up roughly 3.5 million pounds over the next 6 to 8 years. So we're very much at the early stages of contracting. But pleased to see, there's a lot of volume being contracted at the moment. The spot price is fairly stagnant, and a lot of investors focus on the spot price. But as a producer, we focus on the term price. And as mentioned, that term price has been growing.
Mhm. So switching gears and moving on to North America for a bit, you also have a stake in the Alta Mesa mine in Texas, although it's a minority stake. Minority stake. Could you talk about why that's a compelling venture for you, and why did you decide to take a minority stake in that asset?
Well, for us, it's our first venture overseas into North America. We really do believe in production in tier one jurisdictions such as Australia, North America, Canada, for example. That's where we believe there's strong regulation, good governance, and expertise, the people, the talent. So, with that people and talent in mind, we believe that one of the best ISR ion exchange operators or teams is Encore Energy. You've got Paul Goringson as the CEO, Bill Sheriff as the chair. You've got Peter as sort of the COO. You've got a very strong board. Recently, Dennis Stover stepped down, but he's still providing technical input. I mean, arguably one of the strongest operating teams in North America, and who've been through several cycles within the uranium industry. So we've got great confidence in them as a team. We don't have boots on the ground ourselves in North America, so it makes sense for us to partner with a very experienced, capable team who have done it before, and by all accounts, they're off to a terrific start with Alta Mesa going through its ramp up into production. So, yeah, I think going forward, we will be looking at more opportunities and really focusing on those tier one jurisdictions.
As a first mover in the uranium space, could you provide sort of your macro market perspective on the uranium market? What are, if you're talking to investors, what are some of the key considerations which they should be aware of?
Well, I mean, going back to, I honestly do believe there's going to be an overshoot in price in the coming sort of few years due to that sort of structural deficit and no real new supply coming online. So, or missing expectations off the market. So I think that's one area to look at. That demand is continuing to increase, supply is getting very tight. So yeah, it's setting itself up to really have a strong tailwinds behind it. I think right now there's a lot of geopolitical tension. There's a lot of focus on Russia limiting exports to the US putting sanctions on Russian enriched material. You've also got, with the change in national government in the US, with President-elect Trump announcing what could be tariffs against, say, Canada and China. And if it's up to 25%, well, a lot of their uranium is actually imported, particularly from Canada. So what effects will that have? It's a fascinating time. And in the background, what's happened recently in the last 6 to 12 months, or gaining a lot more sort of attention, is the rise of data center demand usage and AI. So you've seen Constellation now restarting 3 Mile Island to support Amazon, I believe. So it's Amazon Microsoft, Amazon. A lot of these new sort of IT dependent and data center growing companies are looking now for independent sources of power. In the background to all of this, of course, is the emergence of small modular reactors and the engineering designs. I think there are many, many engineering groups looking at SMRs. Hopefully it whittles down to, say, 2 or 3 type of prototypes. But that's set to also be a real kickstart for the industry and will put more pressure on that structural deficit as more supply is going to be needed as we go into the next decade. So, yeah, very, very exciting times for the industry. And, from a uranium mining perspective, it's arguably the best of my career, definitely.
Yeah, and we'll leave it at that. Appreciate your time, Duncan, for speaking with me today.
Great. Thank you very much. Thank you.
Thanks. And thanks, everyone, for watching. Join us again next time for another edition of CEO Insights. If you like this video, like or leave a comment below. We'd love to hear from you. And if you haven't already done so, subscribe to our YouTube channel for more exclusive interviews and updates.